Okay, so in today's presentation, I'm going to share with you the exact same money management rules that myself and the other traders here use on a regular basis. I'm going to tell you exactly what you're going to need to trade this system, and then I'm going to give you my favorite trade setup. And at this point in the presentation, I'll bring up my live charts and I will ask you to throw out a symbol or two, something you prefer to trade. You might be in a trade-in now. We can bring up a chart of it, analyze it, and I'll show you how this system would have worked with that particular security. And then, of course, time permitting, I will try to answer as many of your questions as possible. Now, just a few poll questions, just so I know who's out there and I can make sure I cover the proper examples for you. Can you tell me how many of you have seen me present at an event like this or a webinar before? Please just take a moment to type in your chat if you have seen maybe this presentation or any other. I really appreciate that. Okay, and a couple of other quick questions here. Which market do you prefer to trade most? Is it stocks, options, futures, or Forex? Please type that in and we'll move on from there. And lastly, on average, how many trades do you place per month? Is it 1 to 10, 11 to 20, or are you very active? Wow, okay, excellent. Thank you so much, everybody. Really appreciate that. Okay, so a bit of the legal stuff. Please do not trade with real money until you've educated yourself and you're very confident with the system you're using. Trading can be extremely risky if you don't know what you're doing. Now, let's, on that note, cover the money management rules. Now, number one, you should never trade with money you can't afford to lose. We've all heard that a million times, but really what this is about trading with an amount that is small enough that it feels completely insignificant to you. Okay, trading is so much more about how you manage a trade once you're in it than it is selecting an entry. And when you're in it, you need to be able to remain calm, clear-headed, and be able to follow your rules. If you're worried about the amount of money you have in that trade, you won't be able to do that. Okay. Also, never risk more than 5% of your account balance in any one trade. And if you have a larger account, consider reducing this to 2.5%, even 2%. That way you'll have a significant trade on, but you'll reduce your risk dramatically. Also, never have more than 50% of your account balance active in the market at any one time. And yes, I've heard many times people's reaction to this rule is, well, why would I leave half my account just sitting there earning nothing? Well, it's twofold. Number one, there are so many factors when it comes to the markets that are completely out of our control, and an event such as 9/11 can really drive the markets against you. And so the first reason for this rule is to reduce a loss like this should it happen, and secondly, you want to have money there available for you to put back into the markets and be able to trade and make back those losses. And with what I'm going to show you today, it really wouldn't take you very long to make that back. Also, you should spread your trades out. Okay? We've seen recently, especially, some increased volatility in the markets, and we've seen days where the Dow has been up 300 points, S&P's up 30, etc. And on a day like that, you're going to get a lot of setups to the long side. But then the very next day, the markets retrace. And so, should you put on 8, 10 trades, and then suddenly the market reverses on you, you're going to be in a big hole right off the bat. So you want to spread your trades out, select the 1 or 2 best trades per time frame. Okay? Now, a couple of the other sayings that we follow here is, number one, you will never go broke taking profits. And this is meant especially for the beginners in the crowd. When you gain experience in the markets, you're going to learn how to remain in a trade a little longer each time and pull out every bit of profit that you can. But until then, please get used to taking those profits when you can. And remember, trading is never about whether you're right or wrong. That's important. But it is all about how much money you make when you're right versus how much money you lose when you're wrong. Okay? Now, what will you need to trade this setup? So really the short answer is not a whole lot, because you can use just about any charting platform with this, free or paid. It really doesn't matter. There's only one indicator you will be plotting on your charts, and it is the 20-period simple moving average. Now, you don't really even need this indicator. It's more of a visual aid than anything, but it is very useful, and I'll teach you how to use that in a second. But before the question is asked, I do want to say we have tried this with weighted averages, with exponential moving averages. What we've always come back to over the many years of testing this is that the 20-period simple moving average works best. Now, so there is no need to go out and spend money on new hardware or software. If you're watching this webinar, you already have everything you need. Okay? A few benefits of this system: it will work on any market, stock, options, futures, Forex, globally, any time frame, any price level. We've traded this with $2, $3 stocks, and we've traded with the monster stocks such as Google, Amazon. It works the same across the board. You really don't need a lot of experience with this. You'll see how quick and easy you'll be able to pick this up. It is very, very easy to spot on a chart. It has very clear entry and exit points, okay? And it is strong enough to be used as a standalone system. It's been consistent over many, many years, but it can be a great complement to whatever you're trading with now as well. So a bit of background on this strategy. When we first sat down to create this, there were 5 things we considered must-haves for this. And number 1, it had to be simple to spot on a chart. We prefer to keep things simple here at Trading Wins. We don't like to complicate things. With most of our systems, we have a very nice, clear chart, and so that was a must-have for us. Secondly, we wanted to make this available for everybody, so it could be used with any charting platform, and you can. It had to be easy enough to be used by just about anyone, regardless of level of experience, and more importantly, had to have extremely low risk, and I'll show you in a moment just how small of a risk you'll be taking per trade. And most importantly, had to be consistently profitable. And we have traded this through many different types of markets over the years, and it has been consistent throughout. So the components of this strategy: number 1, I've already mentioned, the 20-period simple moving average, and I'll teach you how to use that in a second. And number 2, the other thing you'll be looking for on your chart is an engulfing candlestick pattern. Now, most of you might be familiar with this. We use it a little differently than most, and I'll show you how in just a second. But for the benefit of the beginners out there, a simple moving average is calculated by adding the closing price of the security for a number of time periods and then dividing this total by that number of time periods. So just a straight average. And the engulfing pattern is actually a reversal pattern. It can be bearish or bullish, depending on whether it appears at the end of a downtrend, which would be a bullish engulfing pattern, or at the end of an uptrend, which would be a bearish engulfing pattern. Here, let me bring up my live charts now and show you this setup. Okay, so hopefully you can see my chart very clear. I will zoom in to the examples as we go through them. But right here, I have a chart of the Qs. And whenever we bring up a chart, we're going to be looking for 2 things, and that is trend and momentum. Now, this chart is, in a nice clear uptrend, very easy to spot. But when it comes to momentum, the way we want to interpret momentum is by the slope of the candles or the bars that you're using. In other words, you can have sorry about that, let me get a different drawing tool here. You can have slight momentum in your favor, okay, slight slope. You can have slightly more significant momentum in your favor, or you can have very significant momentum in your favor. And the sharper that slope on the candles, the better, okay? The more momentum there is behind that stock. It works exactly the same way in a downtrend to the downside, and the more significant that slope, the better, okay? Now, once you have that trend and momentum in your favor, okay, all you're looking for is a slight pullback or consolidation, such as you see here. And then it is at that point that you're looking for that reversal signal in the form of an engulfing pattern. So let me draw this out for you step by step so you understand exactly what we're looking for. So number one, we're looking for a slope higher for a long trade. And again, the more significant that slope, the better. Then you're looking for some kind of pullback or consolidation. And it is at this point where you're looking for that engulfing pattern or that reversal pattern to tell you that this retracement is over and that this move is going to continue higher. Now, the reason why we use the 20-period simple moving averages is because during this period of consolidation or this pullback, you could mistake that slope lower as momentum lower. Okay? But if you notice here in this area that throughout that pullback, the 20-period moving average maintained its slope higher. This helps you understand that this consolidation phase or this pullback is nothing more than a temporary retracement before the move continues. That's why it comes in as such a handy tool to use. Now, getting back to the setup here, what the engulfing candlestick pattern is going to look like is something like this. Okay? Now, there's a difference between the setup and the actual trigger to get you in the trade. Okay? For the setup, we are only interested in the bodies of the candles, not the wicks or the tails, okay, just the bodies. And what we're looking for is for the body of the candle on the right to completely engulf the body of the candle to the left, such as we have here. Now, they could be at the same level at one end or the other. That's totally fine, but the candle on the left cannot exceed the body of the candle to the right, okay? Now, that's the setup. For the trigger in, what we're looking for is a trade above the absolute high of that engulfing bar, the candle on the right, including the wick, okay, the absolute high. Once you get that trade above that high, you enter long, your stop goes just below the low, the absolute low of that same candle. So your risk will always be contained to the range of that one candle, okay? Same thing for a short trade. You are looking for a slope lower, a pullback, and then it is in this area that you're looking for that engulfing pattern, or the bearish engulfing pattern in this case, telling you that that retracement is over and that the move lower is going to continue. Now, the engulfing pattern on the short side is going to look identical to the bullish engulfing pattern. Okay? The setup is the same. In other words, you're looking for the body of that candle on the right to completely engulf the body of the candle to the left. The difference, if you're using colors like I am here, is that for a bearish engulfing bar, you want it to be red because you want it to close as close to its lows for that period as possible. And for a bullish engulfing bar, you want it to be green. And ideally, you want it to close as close to its highs of that day as possible. Okay? Now, again, for the trigger, you're looking on the short side for a trade below the absolute low, a trade below the absolute low of that engulfing bar. If you get it, you go short, and your stop goes just above the high. Okay, so let's look at some real examples here, so it'll make it a little clearer to understand. Here we have the cues, and I'm going to zoom into this area of the chart. Now remember, when I zoom in, we'll lose a bit of that slope, but as you can see here, we have a nice slope going in this area. So we have trend and momentum in our side. We have a nice slope higher. We get a nice pullback, and right in this area is where we're looking for that reversal pattern, and here it is. You can see right here how the body of the candle to the right completely engulfs the much smaller body on the candle of the candle to the left. Okay, the wick you can see goes beyond this candle. It doesn't matter. For the setup, we're only looking at the body. Then you're looking for a trade above the absolute high of this engulfing bar, which we get here on the second candle. Okay? And your stop goes just below the low of that same bar. So your risk is contained to the range of that one bar. There's your entry. There's your stop. Okay? And there's your move. Okay? Now, a couple of the very important rules that you must be aware of for this. When you do get this setup, you're looking for that trade above the high. Should you get a trade below the low of that candle first, then the trade would be negated or disqualified. Okay? That one rule alone will save you from most of the trades that won't work out. In other words, most like this will not be losses, they'll just be negated trades. Okay? The other way we disqualify a trade is if we go 2 full bars and it still hasn't traded above that high, we also disqualify the trade. Reason being, obviously the momentum isn't as strong as we had initially thought, so we would disqualify that trade. And I'll show you some examples of that coming up. Let's look at a couple of others here. Here's a chart of UAL, United Continental, and again, we're looking for trend and momentum. We judge that momentum by the slope of these bars or by the slope of the moving average, which does a very nice job for us here. Then we get a pullback or consolidation, and it's right in that area. There's the engulfing pattern. That's the reversal pattern we're looking for. We get a trade above the high, and off it goes. Now, I selected this example of UAL for a reason here. See how we have a gap? Okay, so in this next bar here, in the second bar, we actually did not move above those highs. Okay, so we gave it one more day, but this time it gapped. Now, whenever you get a gap, you have to reassess your risk on that trade, because remember, your entry would be here at the open, okay, but your stop would still go below the low of that engulfing bar. So now you have a much greater risk here. So if you're uncomfortable with that level of risk, no worries. Let that trade go. Don't take it, okay? And there will be many other setups like that. And here's an example on the short side. So again, what are we looking for? We're looking for trend and momentum lower. We judge the momentum by the slope, okay? We get a consolidation or a pullback, and it can be as little as 1 or 2 candles, and then we're looking for that reversal pattern. In this case, in the form of a bearish engulfing pattern, which we see right here. Now, one of the things you're going to notice, most trades that trigger you in other words, you get that trade just below the low of that candle, gives you the green light to go short. Most of them will move in your favor immediately, which is huge for a couple of reasons. Number one, remember when I was talking about our money management rules, I said it's much more important how you manage a trade once you're in it, and the fact that you have to remain calm and clear-headed to follow your rules. Well, it'll be much easier to follow your rules if you're in profit right away than it would be if it went against you. And number two, I also noticed many of you trade options here when I asked that poll question. And as you know, if you get into an option trade and it moves against you, trying to make back that loss in that premium is going to require a much greater move in your favor. This way, if it moves in your favor immediately and you're in profit right away, it's so much easier. Okay? Here, and the other thing you're going to notice is during a sustained trend, you're going to get multiple opportunities to enter. So in other words, you had one trade here. Let's say you had missed that. You're looking for another trade. Now this one you consider, well, the moving average is fairly flat. There really is no momentum there. So I skipped this trade. Okay? Wait, give it some time. Now we do have momentum on our side. You can see a nice sharp move lower, nice pullback, and there's our reversal signal. Okay? Triggers us in, and there's your move lower. Okay? So nice and easy. Here's a chart of Starbucks. Same thing. Okay? Look at those there. Now, you see, another thing I hear a lot is, sure, it's easy to look back at a chart. Hindsight's 20/20. Absolutely it is. I'm showing you these examples here, but I'll show you what happened recently here in Starbucks. Okay? Let's look at yesterday, right in here. Let me draw this out for you. Okay? Right there. And I'll zoom in. So we had momentum, trend and momentum in our favor. There's your reversal signal. Okay, there's your bullish engulfing bar. Triggered us in earlier today, and off it went. Okay. Now, this is also another important example, and I'm going to widen it out, show you something here. When you when you're looking for a bullish engulfing pattern, yes, the bullish engulfing bar needs to be green. The candle to the left can be either color. You see here we have red, green, and which you'll see most of the time, but sometimes you will see green on green, and same with a short trade, you'll see red on red. It really doesn't matter. What matters is the engulfing bar. Okay. Here's a chart of USO, which is an ETF for oil, United States Oil Fund. Okay, you get a very sharp, sustained trend lower, and you get 1, 2, 3, 4, 5 opportunities along the way. Okay, nice, easy trades. When you have momentum on your side, or that slope lower, okay, it's like having a wind at your back pushing you forward. Okay, it propels that stock forward. And that's really what matters. That's the secret to this. Okay? Here's the the S&P Oil and Gas XOP. Same thing. The sharper that slope, okay, the sharper that slope, the better. And you can see here we had a very sharp slope. Here you have your bearish engulfing bar, which is the body of this candle, completely engulfs the body of this candle. You're waiting for a trade below the low of it, which you get the very next day, triggers you in. Your stop goes just above the high. Okay, so this is your risk. This is the range of your risk compared to your potential reward. Okay, and this doesn't even do it justice because I'm zoomed in. This kept going, but what you'll find is that the majority of the trades that trigger tend to move in your favor immediately, which helps you manage that trade much easier, okay? And most of the trades that don't work out are not even losers, they're negated trades. And I'll show you a couple of examples of those. One of them is right here on Craft, okay? Right here, we had this nice move higher, pullback. There's our nice, beautiful, large, bullish engulfing bar, okay? But look at the next two bars, the next two trading sessions. Neither one moved above the high of that bar, okay? And so we disqualified that trade, okay? And off it went. Now, regardless of it being a winner, I mean, there is another pattern here that could get you in, but for the purposes of this trading system, you want to always follow that rule. The other rule that would negate it would be this one here. Here's an example on Visa. Okay. In this area on Visa, we had a nice slope lower. It was a gap lower on earnings. The stock continued lower, then pulled back, giving us a nice bearish engulfing bar. We were waiting for a trade below the low of this bar to get in, but instead it traded above the high, which negated the trade, okay, or disqualified the trade. Now, a little while later, here, Visa popped on earnings, pulled back. There's our bullish engulfing bar. We get a nice pop, and off we go. Okay. So you can be very selective with this. Okay. For all of you who like to trade futures, here's a chart of the crude oil futures. Very sharp downturn. Very nice, easy trades. Again, what you'll notice is that look at the size of those bars. Look at the risk here. Look how small those are. I'll zoom out again for you. Compared to the potential run. Because remember, when you have momentum on your side, more often than not, it's a sustained move. It continues to go. And a little while later, if you had missed that one, there was another opportunity here and another opportunity here. Okay. Actually, on this chart here, with the exit strategy we use, you would have been in it up until this point here. This was the where we got taken out of the trade right there. Now, here's a chart of gold futures. Same thing, nothing changes. The settings remain the same, the rules remain the same. It doesn't matter what you're trading or what time frame. I'll show you a few examples of different time frames as well. The point is you're looking for that slope and momentum in your favor, that slight pullback or consolidation, that reversal signal, and off it goes. Same here. Nice and easy. Okay. For you Forex traders, same thing. Here's the British pound US dollar pair. Nice and easy. You get this beautiful bearish engulfing bar. You get a trade below the low. You enter short. Your stop goes just above the high there. Okay? And then it just becomes a matter of managing that trade. Now, when you come across a situation like this, where you get a second setup, if you're more of an aggressive trader, you can add to your positions here, okay, as you go through. If not, you just maintain the one and you manage that trade along the way. Here's a chart of the US dollar, Japanese yen. Same thing. It's all about having that momentum in your favor, okay? All right. Now, I'm going to actually bring on my coaching coordinator, Raul, and because I see there's a number of questions, and that would be a great time for you to type in any symbol that you want me to bring up, and I'll bring up a chart and we can look at it together and see how this would have worked on that symbol. So I'll ask Raul to come in and help me read off some questions, some symbols. Raul?
It's always an informative presentation. Thank you. Hope everyone can hear me. I was saying always an informative presentation. I'll let you take a drink of your water. And let's get going with Phil, who wants to know about Nike.
Sure, let's have a look at Nike. Okay, Nike's been a great performer over the last year or so. Let me make sure I have my right drawing tool here. There's one there. And then off this gap on earnings, you had this sharp pullback. Now this is a great example actually for the why we use the 20-period moving average. Let me highlight this setup right here. You can see that after earnings, okay, it popped higher right here, gapped up huge, and had a significant pullback. But throughout this whole pullback, the 20-period moving average maintained its slope, okay? And that's the key here. So it doesn't matter how far back the pullback is, whether you get the reversal signal in front of the moving average, overlapping it, as in this example, or below it. What matters is that the 20-period moving average, that the slope on that moving average remains constant. If the pullback goes too far, that moving average will start flattening out. That means you've lost momentum and you no longer want to trade that. Okay? Now, Nike is one of the rare ones. You won't see this very often. But remember I said you can, if you're more of an aggressive trader, you can scale in on other setups. Well, they're all the way throughout here on Nike. This was very, very rare. Okay? But, and we had another setup here just a couple days ago. Another green on green, and it's up today. So another very nice move.
Ron's asking, what's the shortest chart time period that can be used with this strategy? Before you answer that, Frank is also asking about Apple. So why don't we do a one-hour chart for Apple while you tell them what the shortest time frame is?
Sure. So some of the intraday time frames that we prefer to trade with are the 15-minute and the hourly, but we have people trading this with the 5-minute as well. But any time frame would work great. Here's Apple on a daily chart, and let me just highlight a couple setups here. There's a nice one right here. Okay, you can see that the key to this is that slope or that momentum. Okay, we got that move higher. We had about a 4 or 5 day consolidation. There's your reversal signal. There's your entry, and off it goes. So nice and easy. And there's another one back here. And now, sorry, what was it? An hour? 1 hour time frame?
1 hour, that's right.
1 hour time frame. There's another nice one right in here. Right in here. Now I'm zoomed in, and that's why you lose part of the slope. But you see, this is what matters. Okay, you get that move higher, that slope, that consolidation here, and then there's your reversal signal telling you that consolidation is over and that move is going to continue. Okay, nice and easy. That's what you're looking for. Nice and easy. And they're all over the place actually. Let's look at a few others as well.
Gerard is asking about UTX.
UTX, okay, let's have a look at UTX. Okay, well, still being on the 1 hour, there's one right in here, and then I'll switch to the daily as well. There's another one.
He clarified that he would like it on the daily.
Daily, okay, let's switch to the daily. UTX, okay. So, again, looking back, once you have that trend and momentum in your favor, you have a nice setup here, worked out beautifully. And let's see where else. One in here. Okay. And once you get accustomed to this and get used to flipping through a few charts, you'll pick this up really quickly. You'll be able to spot these very, very easily. So again, it works on just about anything.
Mark was asking about the E-mini S&Ps on a 15-minute.
Sure. So let's look at the ES on a 15-minute chart. Let me just zoom in here. Yeah, there's a beautiful one right here. So again, we're looking for that slope higher. Right? There's actually a couple here, I believe. You have that slope, nice pullback. Okay? And right in here, and I'll zoom in for you in case you're working off a smaller screen. There's a couple of setups in here. Okay? Let me zoom into this area. Boom. A couple of very nice, easy setups on the 15-minute.
A couple of quick fire questions.
Sure.
The blue line, the 20 SMA.
Yes, it is.
Okay. Is this good for indices as well as Forex?
Yeah, absolutely.
Can we do a quick Forex example?
Sure.
A couple of people were asking about USD CAD.
USD CAD. Well, I mean, this has been on quite the run lately. Here, let's look throughout here. Let's see if we can spot. There was a nice setup here to the downside, first of all, but then once we reverse course, well, there's a beautiful one right in here, right there, and let's see if there's a few others here we can see. This one was a disqualified trade right in there, trade below the low first, and I believe this one was the latest one right here. So yeah, once you get a sustained move like that, you're going to have several opportunities to get in along the way. Okay.
Brian was asking about Celgene.
Celgene, sure. Let's look at Celgene. Okay, so beautiful one stands out right there.
Sorry to interrupt, Vince.
Sure.
Andre, Herb, Edwin, John, Marty, Zoltan, Greg, I'm sorry. I will try to get to your questions as quickly as I can. I see a lot of symbols coming in. So
okay. How are we doing for time?
We've got about 10 minutes.
Okay. So here's another couple of really nice setups on Celgene. Again, it's really straightforward. It's straightforward technical analysis. And again, here's a green on green for you. The whole purpose of this is to pull out the easy trades. Once you have that trend and momentum in your favor, you've already won half the battle. Okay. Any other symbols?
Quite a few, yes.
Okay.
In the interest of time, I know you need to get back to your presentation.
Yeah. Let me just recap here what we've talked about today. Okay. So let's let me just quickly summarize what we've gone through. So I've shown you a system that will work on any market. We've shown you examples of stocks, futures, Forex, any time frame, any price level. You saw just how easy it is to spot this setup on a chart. Okay, again, it's been extremely consistent and it is strong enough to be used as a standalone system by itself, but can be a great complement to whatever you're trading with now. You saw that most of the times, once it triggers, it tends to move in your favor immediately, which is huge, especially for you option traders. And again, the majority of trades that wouldn't work out with this, okay, are not even losers. They're just negated trades. Now, I do see we have a ton of questions, and I promise I'll try to get to as many as I can, time permitting. But let me make you aware of a pro class we have on this coming up Saturday, March 21st. What I've shown you today is the basic system. But on Saturday, I'm going to be teaching you the complete system from entry to exit. Okay? And I'm actually going to show you 5 different exit strategies, but focus on the one that we trade with the most here. And I'm also going to show you a very unique way to add support and resistance to this setup that really increases the accuracy level. I'm also going to teach you 2 different Fibonacci tools, one that you can use with the entry and another one that will help you identify your targets. Okay? In addition to that engulfing pattern, okay, I'm going to teach you 4 other additional setups so that you can remain active in all different types of markets. So in other words, when you get that move, that momentum in your favor, and then that pullback, at that point where you're looking for that reversal signal, instead of just looking for that one engulfing setup, I'm going to teach you 4 others. You have an arsenal of 5. And one of the best parts of this class is the second half where we do a real-time search for trades setting up that coming week. I will share my watch list with you. I'll show you how I search for trades, and together we're going to search for trades and hopefully walk away with a few that we can put on that coming week. Now the link for this class is tradingwins.com/signal, but before you sign up, let me tell you exactly what you're going to get so you know that it's right for you. About half hour or so after you sign up, once your order is fully processed, you will receive an email with a link to a previous recording of this pro class. So in other words, you don't even have to wait till Saturday. You can watch this recording and start using this right away. But regardless, I will save you a seat at the pro class coming up on Saturday, March 21st. Again, it will be recorded. And as a bonus, we're also going to throw in a 30-day membership to our pro service. Now, I have here by request only because it's up to you whether you want to have this included or not. But let me tell you exactly what's involved with our 30-day pro membership service. Okay, our pro service is the most powerful way to get access to all our systems. You're going to get real-time trade alerts showing entries, stops, and targets. Okay, so it's the best part of our service. And you're also going to get premium nightly videos that will teach you how to trade the various systems that we have. You're also going to get access to our members-only weekly chat. The next one happens actually tomorrow morning. That happens every Thursday, 10 a.m. Eastern. You get to come into our room and ask me any trading-related question you like. And in addition, you can access our library of past educational sessions, and you can re-attend the pro webinars that you've paid for in the past as many times as you like. It's an amazing value, and you get to try it out for 30 days. If you want this as part of the class, just send us an email. Once you've ordered, send us an email at info@tradingwins.com, and we'll be more than happy to throw in 30 days for free. Okay? So together, this is a value of $691, but for anyone on this webinar today, all we're asking for is $97. Okay? The link is tradingwins.com/signal. Now, we do have to limit this to 25 people. Reason being is we typically get people from all different levels of experience when it comes to the markets, and there's a ton of questions. There's a lot of material to cover in that 2-hour time frame. We actually tend to go a little longer. The classes are usually closer to 3 hours. And the whole goal of the class is to answer all your questions so you can walk away from this trading it like a pro. And in order to do that, we need to limit the number. Okay? So again, I'm going to show you the complete system from entry to exit, including 5 different exit strategies. I'm going to show you a very unique way of adding support and resistance that will really increase the accuracy. I'm going to teach you those 2 Fibonacci tools, give you 4 additional setups. We're going to do a real-time search for trades coming up that coming week. And again, if you want those free 30 days, just send us that email. Again, it's tradingwins.com/signal, and it's this Saturday, March 21st, 1 p.m. Ro, if there's questions, I'd be happy to answer.
Well, let me see how many I can get to. First, I want to say thanks to Ted, Brett, Scott, John, Pete, Jan, and Susan, and Fred just signed up for the class. Really do appreciate it.
Looking forward to meeting you.
To seeing you then. Excuse me. Will the class on Saturday be recorded?
Yes, it will. If that time doesn't work for you, it will be recorded. So in addition to the recording you already received of the previous class, you will receive a recording of Saturday's class as well.
Now, exits are, we go back to the same Seinfeld joke, right? Anyone can tell you where to get in.
Yeah.
It's we're getting out. That's the most important part. Is that really the most important part of this class?
I wouldn't say it's the most important, but it's one of, obviously. You could have a profit, but if you don't manage that trade properly, it could quickly disappear on you. So we will show you 5 different exit strategies that you can use. That way, depending on your style, you'll find one that's comfortable for you. But we're going to focus on the one, like the one I showed you in that crude oil example, the one that allows you to stay in the trade the longest.
Ted is asking, The discussion on options during that class, do I need any sophisticated software, or do
No.
I need any sophisticated software to be able to trade with this current system?
No, not at all. And I'll teach you exactly how we would trade this with options. In other words, I'll tell you what kind of expiry you're looking for, what kind of delta you're looking for, when you want to consider a call or a put versus a credit spread, for example. So I'll show you all of that on Saturday.
Christine is asking, Vince, I'm not a frequent trader. Will the system work for me?
Actually, I think it will, only because this really helps put the odds in your favor. And if you're going to pick and choose here and there and not be in the market consistently, you want to be in the market during those times. That makes it easier for you to profit. And when you're trading with that trend and that momentum in your favor, your odds of success go up dramatically.
I want to welcome Jay, Monica, David, Peter, Bharat for joining us. Thank you so much for that. Can we do a symbol or two?
Sure. Let me just bring up my charts again. Absolutely.
Can we do Expedia?
Expedia, sure. Actually, we're in this trade.
And that's for Trent.
Right now. Thanks, Trent. Yes, so for Expedia, there was a nice setup back here. Let's see where else. And there was a short one right here. Okay. And most recently, now this wasn't with this system, this was one of our others, but we did issue an alert here, back here, and it is working out very nicely, up a little over $3 since we're in. But once you're in here now, you see it looks like we might be putting in a bullish engulfing bar here today. And remember, the risk that you have is the range of that engulfing bar. So if you ever see a large bar like that, it's too much risk for you, just skip it. Remember, during a sustained trend, you'll have other opportunities to get in. So just wait for that pullback.
No, a lot of questions still, but I know you've got two other specials that you want to tell people about. This is the first time we've done it. We're going to give people an offer of two choices.
Yeah, absolutely.
Not only that, everything can be free.
Yes.
So tell me about choice number 2.
Yeah. Okay, so choice number 2, if you only wanted to take advantage of our pro membership service without the class, if you want the pro service, you can just go to our website, tradingwins.com. Once you get there on the home page, you'll see a big button that says start your trial. We offer on the site a 14-day trial for just $7. If you sign up for that, we will gladly extend that trial from 14 to 30 days for you for just the $7, okay? But what Raul's talking about and how you can get this for free, including the class and the membership, is we're having a little bit of fun with March Madness. So we did this with the Super Bowl. We're doing it again with March Madness. We are Kansas Jayhawks fans, and they're ranked number 2, I believe, in Midwest. And so what we're offering is that if Kansas wins the tournament, we're hoping you cheer them on along with us, but if they win the tournament, whatever you've purchased here, we will refund your money. Okay?
All right. So what's the stipulation? They have to buy between now and...
Oh, tomorrow at noon. Yes, you must buy before noon tomorrow.
So all the Jayhawks have to do is win the entire tournament.
That's right. Exactly.
It's a bit of a reach,
yeah.
But if they do it, whatever you buy, if you buy the $7 offer, if you buy the $97 offer,
yep.
If you buy our trip to Vegas, which you'll find out more about when you go on the site, you can't lose.
That's right. It's great. We hope you join us. It's a great class. We're going to have another one this Saturday, and we hope you can join us.
Marnie is asking, when can I choose to have my pro subscription start later?
Yes, you can. Actually, once you purchase it, if you don't want it to start immediately, just send us an email at info@tradingwins.com and let us know when you'd like those 30 days to start.